G'day everyone and welcome back to this Friday Hidden Gems Share Cafe webinar. We appreciate your time. We always appreciate your time on a Friday lunchtime. Nothing from me today in terms of updates or what we've seen across the desk. Obviously the markets are very volatile. We hope you're surviving. Okay, let's make a start. Now don't forget to ask, if you want to ask a question, type it in the box provided, the Q&A box provided, and we'll go from there. First up, we have Butn, ASX code BTN, market cap around $29 million. Company's just been listed in the last 12 months or so. The company aims to change the way funding works in business to supercharge cash flow and drive growth. The company is here to help businesses realise their potential. We have with us Rael, who is both the co-founder, joint CEO and executive director. Over to you, Rael.
Thanks, Tim, and thanks everyone for tuning in today. Appreciate your time. We'll smash through it in the next 10 minutes for the presentation, and then we look forward to opening up for any questions or comments and a bit of an interaction. So if we go through the slides, what is Butn and really why is Butn a hidden gem, which is, I guess, why we're here today. Firstly, we're a very tightly held share register. There are top 4 shareholders that own approximately 75 to 80%, which means we really do truly fly under the radar. We've been here before. We're a proven B2B differentiated fintech. We're often incorrectly classified as a buy now, pay later. We're not a buy now, pay later. We're in the B2B transactional funding space. We've been in this space nearly 7 years and done well over $700–800 million of funding to date. So again, we've really strongly doubled down in this space. Why are we also a hidden gem? Well, because of MYOB, fully owned by KKR Private Equity, has a 20% strategic ownership in Butn Limited. And also in conjunction to that, we have a software partnership which provides us with the ultimate reach to MYOB's over 1.2 million businesses across their multiple platforms. Hidden gems going forward, we consistently delivered on what we said across our partners, our growth and our debt. So what we as Tim touched on, we listed near on 12 months ago. We've delivered exactly what we've said we would in the prospectus and over and above what we've said we would across our partners, our JVs, our growth metrics and our debt metrics, doubling down as well. Why is Butn hidden gem number 5? With market movements, we believe we are trading currently at a relatively attractive valuation. We've seen, as Tim again mentioned, the market's extremely volatile at this moment, but having proven what we said we've proven and having done exactly what we've done to date, we believe that now is a great time to buy into Butn. Next slide. Butn's vision, your money today. We're one of Australia's largest transactional funders, and Butn was built to partner. Butn is not a standalone business. Everything we do, we partner with other businesses and we partner for success. And our byline really is funding at the click of a button. We have the ability now to embed our technology into independent third-party platforms to open up that funding for those customers, for those end users, literally at the click of a button. And when we talk about Butn, it really is the home of business and transactions. So that is a button embedded into third-party platforms to allow those end users instant access to finance. Everyone's heard the buzzword embedded finance. We set out nearly 2–3 years ago to build embedded finance. We were first to market with embedded finance. Our strategic partner with MYOB and KKR saw this opportunity and then came along for the ride again with their 20% holding as part of that tightly held share register we touched on before. Next slide. What is embedded finance and why is it the future of funding? Again, embedded finance now is the buzzword. You've seen it heavily in the B2C, in the business to consumer space. We know the business to consumer space now is heavily diluted. Many players coming in, trying to take that market. We're differentiated in the B2B space. That's only business to business. Again, we've been in this space for a number of years. We listed off the back of this, and now we have the technology to back it up. Embedded finance really means that, number one, you get instant or near immediate or instant access to funding, which means the finance, the Butn, the technology is embedded where that particular business transacts, where that business lives. So that means the business now to access funding does not need to go to Google, does not need to call their broker, does not need to call their bank. It's actually a button on their desktop, on their system, one click, 10-minute registration, and then 15 seconds to funding. Secondly, we access through our open APIs to leverage the rich accessible data within that third-party platform. So what we now see is, because we're, again, embedded in these third-party platforms, we have the ability to pull out that historical data. And once we pull out that historical data from the third-party platform, we can make that instant credit decision much richer and much stronger than it would be otherwise. Number three, again, near immediate credit decisions that are better and less open to fraud. So for every transaction, there's 3 or 4 parties. And again, we're one of Australia's largest transactional funders. And this is really how we look through our funding model. So we pull out data from the buyer, we pull out data from the seller, we pull out data from the independent third-party platform that we've plugged into. And off those 3 different paths, we make our credit decisioning within under 10 minutes. Again, very, very hard to have fraud when there's 3 independent parties in every transaction. Number 4, what we call the true competitive moat. We're there at the time of transacting, at the place of transacting. The company or the business looking for funding does not need to leave that particular ecosystem to access that funding, whereas previously they would have, again, had to call Google, call the bank, or call their brokers. We're right there again. Funding at the click of a button. Next slide. What are Butn's capabilities? We've touched on it before. Number 1, a strategic partnership model. Butn is not a standalone business. Butn was built to partner. We've partnered with the likes of MYOB. We've partnered again with the likes of Freightlancer and others that we've announced recently. And this is really how we take our tech and how we take our funding model to the nth degree. This gives us mass origination, mass distribution, and a very low cost of acquisition because we're embedded and because we're integrated within these third-party platforms. We also have, again, the data verification and insights that allows us to get that quick credit decisioning. In workflow approach, when a company today creates a transaction, whether it's an invoice, whether they need trade finance, they're creating it on a platform, whether that platform is MYOB, whether that platform is a marketplace, whether that platform is a CRM system, multifarious platforms. Butn's open APIs allow us to integrate and to embed and to overlay our technology within those third-party platforms, creating this competitive moat. So they don't have to leave that ecosystem. They don't have to look for other funders because all the funding they need is right there at their fingertips at the click of a button. We have a differentiated approach that we call transactional funding. Butn, one of Australia's largest transactional funders. This allows us to have low risks and low losses, which we'll say further on. But it allows us also to have flexible, transparent pricing to those customers, which is efficient as well. We have a fixed fee per transaction model. We don't charge admin fees, upload fees, download fees. It's a fixed fee per transaction model, which is very clean and very capable for those end users to understand what they're being charged, how long they're being charged, and when they have to pay it back. And every business is only as good as its team. Butn, being 7 years in the B2B space, founder-led between myself and my co-founder, Walter Rappaport. We've taken this business from inception, near on 7 years ago, to nearly well over 800 million of funding to date and continuing to perform. As we said in the prospectus, near on a year ago when we listed, the business model is now being proven out. It's fast growth, and we're again doubling down on those industry low losses that sit below 0.1% of total cumulative transactional funding to date. Next slide. High level of Butn products. We have a spectrum of products that we offer, SMEs in the B2B funding space. The main products that we offer the market are Butn X, Butn Pay, and Butn Now. Butn X is our take on invoice factoring, where we'll fund up to 100% of the invoice value less the fee. We give them up to 90 days from the invoice value. And again, this is based on a transaction by transaction basis. We've touched on it before, buy now, pay later. We're grouped as buy now, pay later, but we're not buy now, pay later. We have a product called Butn Pay, which is our trade finance product, which allows a company to go and buy their inputs when they need those inputs, turn it to an invoice, sell it onto the invoice, and then allow us to fund it off the back of Butn X. Butn Now is our third product, which is advanced commission products. Real estate agents or mortgage brokers settle a deal. They're waiting up to 30, 60 days to access those commissions. Butn now has the ability to bring forward those commissions, and the business has access to those commissions at day one instead of waiting those 30, 60 or 90 days. Next slide. Just flying through the numbers. Again, these are all public numbers. Origination growth up 30% to over $120 million. Consecutive record quarters, Q1 and Q2 F22, and the growth again being delivered with our historical low write-offs of under 0.1%, which we believe is the envy of anyone in our space. Originations again tracking high. Total originations up 30% in the millions, and revenue up also near on 12%. So great growth story that we're continuing to grow. Next slide. Positive platform performance. As we said before, we have the ability now to grow with a low cost of acquisition. You won't see Butn with huge billboards anywhere. We're built to partner, and we distribute our products through our partnership model. MyOb with over 1.2 million businesses within their ecosystem, strategic partner and 20% holder in Butn, fully owned by KKR Private Equity. Freightlancer, another subsidiary of Freelancer, over 50 million freelancers within that platform. Huge win for Butn. AgentBox, one of the leading real estate agency CRM systems. Ozedi, Offload, etc. So really a number of key strategic partnerships that we continue to distribute the Butn suite of products with. And you can see on the right-hand side, the originations platform growth. We're tracking at 18 times growth month on month. So really huge numbers coming out of that. Next slide, please. We've touched on debt as well. We've successfully restructured our debt. Cost of funds, reducing the cost of funds recently to 6.2% per annum from 8.4%, which is a direct to bottom line position. And again, this increases our origination, our capacity as well to fund nearing on nearly $300+ million. Next slide. Investment summary, as we touched on, massive opportunity. We offer B2B in the $300 billion space. We're a proven performer, well over $700 million funded to date, leading credit risk management, industry low write-offs is less than 0.1%, embedded fintech technology. Everyone's talking about embedded finance. We were there first and front and center. We have a growth tipping point as well, which allows us to plug into third-party platforms, scalable at growth, low cost of acquisitions, and increasing that operating leverage. Founded by myself and my co-founder, Walter Rappaport, highly credentialed board, including Mike Hurst, ex-CEO of Bendigo and Adelaide Bank, an experienced management team. Tim.
Rael, thank you for that. A couple of questions here. Who's the actual end funder? Is that the Butn itself? And who are the partners behind that funding further down the path?
Sure. So that is correct. So Butn does the actual funding. We do the credit. We do the registration of the end user. We do the funding of the end user and the reconciliation of the end user. So really it's a plug and play. What we say internally, plug and play, you get funded today. So we'll take that plug and play technology into the third party platform. We'll run the credit, we'll provide the funding, and then we'll reconcile it at the end. And the third party platform allows their end users to get instant access to finance.
And sorry, so you're the Butn is the source of funding?
Correct.
Right.
That's exactly right.
And can you talk about kind of your fee structure and your margins through these transactions?
Sure. So as we touched on, we're fixed fee per transaction. So we don't charge an interest rate. We're one of Australia's largest transactional funders. And for every transaction that goes through the book, it's a fixed fee. And that fee can sit anywhere between 2 and 5%. On that particular transaction. So we are in this high growth, high volume model.
And given there is a focus on this kind of small business or SME as your client, who are the competitors in this space at the moment?
Sure. Look, again, we started this business. We started building nearly 7 years ago. We started building out the technology nearly 3 years ago. We're ahead of the game within embedded finance, especially in the B2B space. We're one of the sole funder today on MyOb as well with their million businesses. So when you talk about competitors, we're not naive enough to think the competitors will come for us, but at this stage, we believe we're well ahead of the game.
And there's a good question here. Will a rising interest rate and inflationary environment squeeze your margins?
The margins on one side, but the funding is on the other side. So what we're seeing again is that high growth coming in now as well with the various JVs and partnerships that we're doing, that high distribution. And while the margins are on one side might be changing, on the other side we're seeing the increased transactional volume through the book. So again, we're in that high volume environment.
And where does the credit risk sit of the customer?
With Butn.
With Butn.
Correct. So that's what, and again, talking about the credit risk, as we touched on before, 0.1, less than 0.1% across nearly 800 plus million of transactional value to date. So we're very comfortable with our underwriting process, with our credit writing process, again, as we continue to scale, because we do have access to that third-party data from those independent JVs that we've integrated with.
And the pathway to profitability, you mentioned revenue. Where are you in regards to profitability?
So we haven't officially put our forecast, but we can tell you that if the growth numbers continue like we're seeing now on the platform with the low cost of acquisitions and the cost of our funding coming down, which is what we've achieved, everything's pointing in the right direction.
And finally, I mean, it's a great partnership with MYOB there. And as a shareholder, did they play any role in terms of management or input into the business?
Sure. So MYOB has a board-appointed seat on our board as well. So they're actively involved. They're not passive, they're active investors. MYOB went out to market to find a partner. After months of their due diligence, etc., they came on, again, not only with a strategic partnership with our technology embedded into their platform, but also with a 20% holder and a board seat. So we're, that for us is a huge tick of approval, and also that for us is obviously a huge win, given their market size and their market reach, and they're owned by KKR Private Equity, one of the largest private equity groups in the world. So
essentially, you can access their client base. Is that right?
That's exactly correct.
Gotcha. And would their shareholding kind of restrict you to work with the likes of Xero, for example?
What we say is, MYOB and Xero play different roles in different spaces. With MYOB's huge reach today, again, with over 1.2 million businesses across many, many millions of different areas within their business, there's plenty of Butn to do. So we've listed under a year and we're just scratching the surface. But if the numbers are anything to go by, and our growth numbers are anything to go by, what we've done in this year with MYOB alone, we can see that it's definitely the sky's the limit.
Rael, thank you for your time. Have a nice weekend. We'll follow your story with interest.
Looking forward. Thank you again, Tim. Appreciate your time and everyone else.
Next up, we have Australian Potash, ASX code APC, market cap around $50 million. The company is the sulphate of potash, SOP, for those who don't know, developer, which holds tenure across 4 projects in West Australia's northeastern goldfields. We have with us the Managing Director and CEO, Matt Shackleton. Matt, over to you. Thank you.
Thank you, Tim. Good morning, everybody. Thank you very much for your time to listen today to the Australian Potash story, which is a story about the Lake Wells sulphate of potash project and what we've done over the last 8 years to enhance decarbonising the food supply chain. Next slide, please. And we can probably skip through that one quite quickly. Just a very high-level overview. The potash market, as I'm sure most people are aware, is a very contemporary issue. The conflict that's happening in northeastern Europe at the moment has created a great deal of disruption to the fertiliser and potash supply chains, with both Russia and Belarus accounting for approximately 40% of the world's global supply of potash minerals. So we've got a compelling macroeconomic model that we're developing into, but it's not only that conflict, it was also the supply disruption that we saw coming out of the COVID pandemic. So what we're endeavouring to do is develop a project that will quite directly address de-risking that food production supply chain. Those who don't know, potash is an essential, non-substitutable mineral fertiliser. Without it, the world cannot increase the output of food from an ever decreasing arable land area. So that's the basic theme that needs to be remembered here. Without potash, you cannot increase the food supply. And without potash, you cannot secure your food supply. So we're producing into that market. We're also looking at a very strong upward forward demand curve. Very particularly, we have developed the Lake Wells sulphate of potash project along very proven, very tangible commitments to ESG principles. In fact, we've now got registered ESG funds sitting on our register, and we are actually targeting to get an ESG rating by the time we're in steady state operations. We do believe we present a compelling equity valuation opportunity. That is by virtue of the fact that we think that the retail market is over pricing the development risk on these projects. 90% of our production is under binding banked take or pay off take agreements, and we have about 70% of our debt target credit approved with Australian federal government concessionary debt facilities. We're in Western Australia. We probably don't need to remind many people what Western Australia represents. Next slide, please. On the project specifics itself, this project does carry a best-in-class mineral resource. It's the largest measured JORC compliant resource in Western Australia. It alone is approximately 6 times larger than all of the other measured resources combined, with an 18.1 million tonnes contained SOP. Now or sulphate of potash, I should say, over the 30-year mine life, we estimate we'll deplete about 23% of that resource. So you can see these are very long-lived, multi-generational projects. 90% of our output's under binding take or pay offtake agreements. We are FID ready, so we're shovel ready to go. 6 of the 8 construction contracts that we have worked up and are ready to conform will be struck on an EPC basis. So we're looking to move the risk associated with schedule, with cost and with performance to the head contractor. Head contractor is GR Engineering Services here in Western Australia, a very well known, probably the preeminent EPC contractor in the state. And as I say, long-term concessionary debt facility is approved already. The NAIF facility is for 17 years, with the first 8 years being interest only. So these are long-term debt facilities for long-term asset constructions. We're not trying to build a house on a credit card. We're building a house with a properly constructed mortgage, if you like. Next slide, please. As I say, we are moving very, very quickly through the ESG clock. So what we've got to set ourselves as a target by operations, we'll be able to estimate or measure accurately our scope 1 and 2 emissions. Our scope 3 emissions, fertiliser supply chain is under a great deal of scrutiny. Agriculture is under a great deal of scrutiny from an ESG perspective. The suppliers that the customers that we have are similarly committed to understanding their scopes 1 and 2 emissions. So we anticipate by the time that we get our ESG rating, we will be able to estimate very accurately our scope 1, 2 and 3 emissions. Next slide, please. Environmentally sustainable. These projects are solar salt projects. So these are projects that allow, the biggest part of our operation is a solar beneficiation step in the middle. So we leave the brine, the very salty water that contains all the minerals, we leave that sitting under the sun and exposed to the wind for a full 2 years. That beneficiation process, or that brine concentration process, which forces the crystallisation of the salt minerals contained in the brine, that's a benign process. It's very, very cheap and it's very free. We're going to leverage that already very low greenhouse gas emitting status of this project by building a high renewable energy fraction power station. So this is a power station that's been designed, the contract's been conformed, and by the time we're in operations, this project will produce, we estimate, somewhere in the order of 70% less greenhouse gas emissions than 80% of the existing global supply of sulphate of potash. That puts us into a very, very strong and investable position in terms of decarbonising the food supply chain. Next slide, please. As I say, our partners, we have 4 customers with binding banked take or pay offtake agreements. Those partners are similarly committed to understanding their pathway or their part in the food supply GHG pathway. They're similarly committed to reducing that. Our product has received organic certification across the major markets we'll distribute into, including Australia, Europe and the US. And the debt that we will issue has been verified under the Green Loans program. So you can see what we've done here with Lake Wells is we've positioned it very, very well into the ESG market. So we can see the tide of investment theme changing to one that is very, very heavily focused on sustainability, and we're in the fortunate position to have a project that lends itself very easily to that sustainable position, which we are leveraging from. Next slide, please. We're also very active in our community. We're a small company with a market capitalisation of about $50 million. Over the last 2 years, we have developed what's known as the Latent Training Centre. This training centre has now received a registered charitable status. It's a not-for-profit run training centre, and we're about to train our 50th Aboriginal person through the vocational training program. This centre is linked into the range of training programs throughout the eastern and northeastern goldfields, and it forms a vital part in the subsequent employment pathways for people who would otherwise face insurmountable barriers to entry into both the training and the workforce chains. Next slide, please. As you would expect of an ASX listed company, we have all of the governance structures applicable. We've got a very strong board of directors, and from beneath that board, we've established the appropriate committees. So we're managing the sustainability of our Lake Wells SOP project under the risk management committee. So we've got a risk and sustainability committee. We're Big Four audited, we're Big Four taxed, and we're listed on ASX. So you can see that not only have we got a project that lends itself to very strong ESG principles, we've addressed what we believe to be the highest governance risks associated with companies of our type, and we've put in the structures to mitigate those risks. Next slide, please. Very briefly, from a board perspective, across that board of directors, we have in excess of 100 years in minerals project development experience. Rep Brown's, our project director alone, has developed over 65 minerals projects on many, many continents around the world in many, many different commodities. So we think from the board perspective, we certainly have the expertise and the experience to manage the development and the operation of a solar salt project. Natalia Streltsova is a process chemist. From a management team perspective, Tony Dominkovic comes in as our project manager. He comes to us from Geoengineering Services, our head contractor, and he has experience of working on the SOP projects being constructed here in Western Australia. And Ryan Duncan, our technical manager, was for 10 years working with Rio Tinto. For the last 3 years of his tenure there, he was responsible for running the solar salt operations at Rio Tinto's Dampier salt operations. So you can see we've put together the appropriate team to handle governance at the board level and operations at the management team level. Next slide, please. Very briefly, we're 500 kilometres northeast of Kalgoorlie. We own 100% of the project. We'll produce 170,000 tonnes per annum of SOP, which is about 2.5% of the global supply. NPV on a real basis of $415 million using an SOP price of $550. SOP price at the moment is about $1,200 US a tonne. We've got a capex of about $300 million, including contingencies, and we're shovel ready. We have all of the approvals that we need. They're in place. We're ready to go. We've got full environmental approval. We own all the mining leases, and we don't have any native title or heritage issues. Next slide, please. The value proposition, as we said, right now we've got an NPV of $450 million, and the market's giving us an EV of $57 million, based partly upon the nervousness created by some of the travails in the peer space. We believe we've mitigated those risks. Next slide, please. The reason we think we've mitigated those risks is we're modelling our development quite squarely on very successful developments around the globe, including Compass Minerals, which has been operating for over 50 years. We have the same process engineers that Compass Minerals have, and we're using the consultant that was their general manager for operations for 8 years. So we believe we've tapped into the right successful projects, not only to execute the development of our project, but also to establish our operational strategy. Next slide, please. Potash market is going crazy. This is thankfully, well, I shouldn't say that. That's a crude thing to say, but the conflict that's happening in Northern Europe at the moment has created an awful lot of attention on potash. It's because potash is essential and non-substitutable. However, underlying that is the increasing population theme. You cannot feed an increasing population with the same area of land unless you apply more potash. Potash is the limiting fertiliser agent in increasing food supply. Next slide, please. And if we can just flick to the next one. So we believe that, in conclusion, that the Blackwell Sulphate of Potash project is a substantial valuation opportunity because there's been a misguided risk weighting. Potash is an essential element, and sulphate of potash is the premium form of that essential element. We're in a very good place in WA, and we're positioned to be a global leader in SOP production. We have got the premier SOP project amongst the crop here in Western Australia, and we're shovel ready, and we're supported by very long-term, very secure federal government debt. Thanks very much, Tim.
Thanks, Matt. Thanks for your time. You'd be pleased to know that we had a Potash article on Share Cafe, which was the #1 article last year, which surprised all of us. So there's obviously a lot of investor interest in this space. Now, on your register, you've got Mark Creasy, who's obviously a well-known mining entrepreneur. How did he come on board?
Mark has got ground, well, Mark's got ground everywhere, as we all know, but some of the ground that Mark's got is out our way. And I started speaking to Mark in about 2014. Some of the ground that he had allowed us to expand the scale of our project. So we did a transaction that brought him on as our largest shareholder. And Mark's been very supportive of Australian Potash ever since that, and continues to be so.
Yeah, I must note that Kerry Stokes is out there, I believe, too, in the potash space in Western Australia.
Yes.
Now, when you say you're shovel ready, and there's 2 questions here on that, when will production commence?
So it's from final investment decision or from the commencement of execution. It's 27 months until we produce potash. And so we're targeting a 36-month time frame to get into steady state operations. So we're targeting the end of 2024.
And within the sector, and you did touch on this, there's been a couple of casualties, more from a technology perspective. Can you talk more about your tech partner and the testing of your technology in terms of process?
Yeah, sure. I suppose a couple of things about that. These projects do work, and there are many, many examples of them working successfully around the world. There are many examples of them working successfully using the technology that the 2 peer companies are using. What we didn't see with either of those companies was the appropriate management framework around the execution strategy. The partners that we're using, however, from a technology perspective, we use a firm named NovaPro as our process engineers. They're based in Canada, and they do lots of consulting work around the salt space and the SOP space, including 2 Compass Minerals. And we're also consulting with a fellow by the name of Corey Milne, who ran Compass Minerals' Ogden operation for 8 years. These are operations that need to have very highly qualified, skilled professional chemists operating them. These aren't your average gold mine with a bunch of millies running around operating a site. These are very, very sophisticated operations, and you need to have top flight people running them. That's why we've had to go overseas for that expertise.
And obviously the Western Australian government has kind of some faith in the industry because they've just recently announced a 5% royalty on local potash producers. How do you feel about this?
Oh, look, there's a conversation that we've been having for some time. There's no doubt everybody would like a cheaper royalty. There is a point, however, where the government needs to manage their budgets and apportion funding appropriately. I think that conversation is still ongoing. They have shown a willingness to support the early startup stage of these operations, which is very encouraging, and we're looking forward to that being extended to the balance of the industry.
And you mentioned that the SOP price. How is this price? It doesn't seem to be that transparent from a commodity perspective.
So the pricing for SOP is really underpinned by an industrial process called the Mannheim process. The Mannheim process is where they take muriate potash, which is the red potash that the Canadians produce and that the Jansen mine will produce. They take that potassium chloride and apply about 450 degrees centigrade to it, put sulfuric acid with it, and they create sulphate of potash. Now, that is the marginal cost producer in the industry. That process costs about $150 to $200 a tonne, depending on the cost of your inputs. So therefore, SOP generally trades between $200 to $250 a tonne more than SOP. That's the underpinning for the pricing mechanism for SOP when you ignore the supply-demand metrics that we're seeing at the moment.
And Matt, just finally, you touched on the strong ESG principles of your potash process, and you mentioned a rating. So, how do you get to that next stage in terms of having an ESG rating?
Well, to get an ESG rating there, it partly is driven by market capitalisation. So there's some work to do there, quite clearly. But the other thing that you need to do is you need to ensure that you've established principles that are consistent with global ESG principles, and you've put them into the public market and they are visible and assessed as being appropriate. So we're in conversations with those ratings agencies, and the point behind it, the drive behind it, is to make it easier for funds with ESG mandates and investors with ESG mandates to see an opportunity and not have to go through a complex audit process in order to make an investment. That's where we see an ESG rating having some value to a company like ours.
Understood, Matt. That's all we have time for. There's a couple more questions there. If you could type your answer live if you have time. Otherwise, okay, I'll send them through to you next week.
Thanks very much, Tim. Thank you, everybody, for your time.
Have a nice weekend. Next up, we have Riversgold, ASX code RGL, market cap around $30 million, 1 year return of up 20%. The company is an Australian-based gold exploration company that's recently pivoted to lithium. We have with us the CEO, Julian Ford. Julian, over to you. Are you there, Julian?
Good day, Tim.
Thanks,
I'm here. Can you hear me all?
Yep, over to you. Thank you.
All right. Thanks, Tim. Well, the title, as you said, says it all. We're going big into lithium in Western Australia. So we made this pivot change on the 10th of March when we announced the acquisition of EV Minerals. It was 9 months in gestation, and our patience and selection of this project has, I believe, payoff, and that'll prove itself as we go forward. In my 10 minutes presentation, I'll outline to you how this is going to transform our company for our shareholders. Next 2 slides, please. So we'll go straight on to the... Thank you. So why lithium and why Western Australia? Let me start with lithium. If you're watching here today, you'll probably appreciate there's a momentum towards the decarbonisation of the global economy. Lithium's key to that. It's the lightest metal, and so where there's a power to weight ratio, specifically in batteries, there's no substitute. There's also consensus that there'll be a demand of about 400,000 tonne per annum of lithium by 2030. For those of you who use lithium carbonate equivalent, that's about just over 2 million tonnes per annum. Now, the graph I've shown on the left there is the supply side. I'll focus on the supply side because, you know, that's what I know about and that's what we focused on. What you see there is by 2021, global lithium supply reached 100,000 tonnes per annum. And of that, about just over 50% came from Western Australia. The demand by 2030 is for 400,000 tonne per annum of lithium. So that's a 4-fold increase. And the issue really is, where will this come from? That's something all the experts are grappling with, and there's general consensus we're going to struggle to meet that. If you look at our competitors, the Chinese really, while they've increased their production, are constrained by both minerals and by grade. Their mines are declining. The orange shown in that graph is South America, which is primarily Argentina and Chile. While the brines do produce cost-effective lithium, the problem is most of their projects take 9 years gestation from concept to production. So really that leaves Western Australia. As I said, we have produced over 50% of the world's supply. Greenbushes produce about 30% of the world's current production, and they've doubled their capacity with that production coming on stream in 2020. Next slide, please. So we think WA is going to do it. The project we acquired is Tambura. You see that in the bottom right of the slide. We like the Pilbara for a number of reasons. One, it's a tier 1 world-class place to be producing and mining. We have a track record of Wodgina and Pilgangoora, which was acquired by Pilbara Minerals in 2014. That's now an $8 billion company. Wodgina was acquired by MinRes, I think for under $100 million. They repurposed and revisioned that mine as a lithium mine, and a year later they sold that to Albemarle, a 40% share for $1 billion. So this is clearly elephant territory, in a place you can make lots of money if you know what you're doing, and for exploration. I won't go into the details, but essentially in this area, you're looking for what is called LCTs, or lithium, cesium, tantalum deposits. You need to be in the greenstones, and you need close proximity to what we call the split rocks groups, which is what causes the mineralization. The region has only about 4% or less of pegmatites, which is where we find this mineralization or mineralized. So you really have to know what you're doing and where you're looking. A number of vectors really have to line up for that mineralization to be there. The concept and the geological hypothesis is now well understood. And one of the West Australian leading experts in the field is Dr. Marcus Sweetapple. So I contacted him in October last year, and we've been working together. Marcus did his PhD at Wodgina, and then in 2014 was hired by Pilbara Minerals when they started out their exploration at Pilgangoora. Next slide, please. So I took Marcus up soon after we acquired this project for EV Minerals earlier this year. And fortuitously for us, he confirmed the LCT pegmatite model. What you generally find is what we call the Goldilocks Zone. So that Goldilocks Zone is within 5 to 10 kilometers of contact between the granites and the greenstones. We've got about 31 kilometers of contact here, both on the west and the east side. We have 2 granite systems. We started up in the northwest, where we had previous mineralization from historical reports. We flew up there in February this year to identify and confirm the model. We found high-grade samples, and you'll see some of those results on the right. I flew up with Marcus and the rest of the team a month later. And what we've defined there so far is 3 targets. Bengal was from historical mineralization. We confirmed that with additional rock chip samples. Ragdoll was the first project we went to. And then more recently, Line is a new target, which sits just south of Ragdoll, and again has multiple mineralization. If you look at some of the photographs in the rest of our slide, you'll see the granites there, and you'll see the mineralization in that granite. So the mineralization really starts thin. It comes, its genesis is in the what we call the split rocks pegmatites. It goes through the older granites, and as it gets into the greenstones, it balloons out. So that's what we're targeting. We've only explored 4% of this project so far. We'll mobilize a team next month, having got our tenement finally granted on Tuesday this week. And our plan really is to define which of those targets. I expect that we'll generate a lot more targets in the coming weeks and months, but really we need to define and refine the best place to drill, and we'll start drilling as soon as we can. So that's really the key to our Pilbara project. As you can see there, it's project number 1. We like the Pilbara. The exploration is relatively easy, as most of the mineralization is not covered by transported cover. Watch the space as we look to add additional projects to our Tambora project. We have 2 other tenements there, which we really haven't started on yet, but we started Tambora because that's where we knew we had mineralization. Next slide, please. So when we go, if you look at our corporate slide, our shareholder, you can see the jump in both volume. We had a bit of a messy shareholder register to tidy up. Most of those 100 million of options have now been exercised. The remainder of those options are currently out of the money. We have just a market cap now of just $37 million, which when you compare us to our peers is still relatively cheap. We have a very supportive shareholder base, which is pretty important as we go through the growth. We've got just over $3 million in tin at the moment. So we're well funded to take the exploration until we're ready for resource drill out. The next slide, please. The board is an experienced board, and most importantly, I think, is the relationships and the experience we have in Western Australia. Most of those in WA will appreciate that access to resources, I'm talking people, geologists, drill rigs, is pretty tough. And our strong relationships and reputation will assist us as we go forward. Next slide, please. So in simple terms, and I'm going to leave as much time for questions as possible, because there's a lot of questions I hope people be asking. So we're in a tier 1 jurisdiction. In very simple terms, we need to grow another 20 green bushes to supply the world's demand in the next 8 years. Our view, and there's general consensus on this, is that the brines will struggle to meet that demand. The Chinese are unable to do it. They simply don't have the mineral resources. WA has doubled its capacity in the last couple of years. There's a lot more lithium pegmatites ore bodies to be found in WA. We have a great number of companies that have gone before us, and I look to companies like Latent and the sale of Kidman Resources, who have achieved spectacular returns for their investors. So we really like the space. We understand the jurisdiction. We've had a lot of success, and we've been patient and careful so far in the projects we've acquired. We're looking to add to that portfolio as we go forward. And I'm pretty optimistic that we will find one or more tier 1 lithium projects in the next couple of years to meet what is a very large deficit in the lithium supply. And there is no substitute for lithium when it comes to power to weight ratios in batteries. So that's our story, Tim. Hopefully it makes sense. It's a relatively simple story, and I'd like to take questions.
Thanks, Julian. We've got quite a few questions. Can I start by saying, I think you mentioned you've only kind of drilled 4% of the asset. Can you explain to us what gave you the confidence to kind of pivot from your gold assets into lithium?
Well, fortuitously in Western Australia, the gold occurrences and the pegmatites that are lithium rich occur in the same geology. So from a geological perspective, we had a pretty good understanding of the space. I spent the last 4 years in the EV mineral supply space, so I had a very good understanding of what the demand was. And so we really leveraged our network to look at lithium. At the time, mind you, the lithium prices had still not kicked. They've only really kicked in the last, say, 6 to 9 months. But we were very careful and selective, and we've been looking in that space. And my view is, with the expertise and knowledge we have in how to do exploration efficiently and effective in WA, this is going to be a very, very successful switch for our investors, and so far it has been.
And can you give us a little bit more colour on who are some of the other producers out there near your project, and what sort of lessons can you learn from their activity?
Are you talking about the West Australian producers?
Yeah.
So I think, Greenbushes has been a very, very large and consistent supply of both tantalum and, to a lesser extent, lithium for many years. It's a freak of nature in terms of the ore body. It runs 2% and it's very large. And really, until recent times, there was no real demand for the type of quantities of lithium you've seen. Over the last 2 years, as I mentioned, Pilbara have gone from a small exploration company. They acquired their project, Pilgangura, in 2014. They're now an $8 billion company. MinRes acquired Global Gems mine up at Wodgina and have been very successful there. And then more recently, Kidman sold their 50% share to Wesfarmers. That's a joint venture, and they just about to start commissioning there, or are commissioning there now. So, the space, I guess, is hotting up. We've got 2 processing plants currently being built in Western Australia, being commissioned at the moment. So really, there's, my personal view is that the lithium space in the next 8 years will look will make the iron ore boom here in WA look like it's a Sunday afternoon picnic. It's really going to be that big.
And the tenement agreement you have is for 5 years. Have you got an option to extend that?
Well, that's just the first grant, right? So under WA mining law, you get a 5-year, and then basically it's 5 + 5 or 6 + 6 actually. So we've acquired 100% of Mineral Equities, which is the company that had the tenement. Does that answer your question, Tim?
Yes, it does. And in terms of cash flow, how much drilling can that support in the near term?
Fortunately, the drilling's relatively shallow. So drilling's not very expensive. Once you're in the pegmatites and it's mineralized, it's relatively simple. So our current cash resources should allow us to drill and define and, I guess, determine if these are going to be likely to be economic mineralized pegmatites or not. By the time we get to resource drill out, I guess we'll have to go back to the market, but my view is based on historical precedents that'll be a materially higher share price than we're currently trading at.
And just finally, Julian, just in terms of time frame, can you give us a best guess of when you think you could get into production?
I'm just going to answer that very simply. Pilbara Minerals at Pilgangoora went from discovery to production in 4 years. Well, that's a good benchmark to, we've only just made discovery at surface. We haven't drilled a hole yet. When we drill that first hole, that indicates we're very likely to have economic mineralization. That's probably a good indicator.
Great, Julian. That's all we have time for. I suspect it might be the last question. There's a rebranding coming through, is there, at some point?
Well, you probably notice I mostly refer to RGL rather than Riversgold. We'll focus our energies and efforts on getting holes into the ground and defining resources. That we still retain our gold projects around Kalgoorlie. They, remain very exciting, but they primarily sit under a salt lake, and that's expensive.
Understood. Well, thanks, Julian, for your time. Have a nice weekend, and we'll have you back later in the year.
Thank you.
Next up, we have Galileo Mining, ASX code GAL, market cap of around $150 million. The stock has risen 270% over the last 12 months. It's risen 100% this week, and it's probably the hottest stock in the market. The company's focusing on discovery of base metals in Western Australia. And while nickel has been the focus, it's the recent platinum and palladium hits that have grabbed the market's attention. We welcome back Brad Underwood, who's the chairman and managing director, in the office today, not out in the dirt. Brad, over to you. Thank you.
Thanks, Tim, and welcome everyone who's watching this. If we can go to the next slide and the one after that as well. This is a quick presentation where I will give you an overview of the company for those people unfamiliar with it, and then we'll get into the recent discovery and then the many other prospects we're working on as well, which we believe have a lot of unrealized and untapped potential. The key messages are on this slide here. We are well supported. Mark Creasy is our major shareholder. IGO is our second largest shareholder. We have high value targets, nickel, palladium, and I think we've demonstrated the potential of those targets to create value. Having said that, we believe we have an early discovery market valuation. So there's a lot of potential upside if we are able to go out and demonstrate a substantial resource exists at the area where we have had that early stage success. We also have a track record of multiple drill campaigns throughout the year. We usually do 4 to 5 drilling campaigns. It's a very targeted approach. We complete a drill campaign, look at the results, and determine whether that prospect is worth additional drilling. So that methodology has worked for us at the Callisto prospect, and we have many other prospects where we are undergoing the same technique, and we hope to make further discoveries as well as establishing a good size resource if we're able to demonstrate that with the next round of drilling. We're also well funded. Next slide, please. Quick look at our corporate snapshot. As Tim mentioned, we have had a quick price appreciation on the back of a discovery, but this has been years in the making. So just roughly, I think since we listed in May 2018, 4 years ago, we've undertaken around 16 or 17 drill programs, and we've tested something like 35 or 40 targets. So this target has come up for us. We've been working in the area even before listing since 2010. We've been working since listing since 2018. We've finally had a reasonable success, and you can see the result on the market. Next slide, please. Quick look at our board. The important thing to note here is our metallurgist and non-executive director, Noel O'Brien, has worked for 30 years in Africa and has a lot of experience with palladium, platinum, nickel, copper sulfides of the style that we appear to have intersected at Norseman. So it gives us a head start in understanding the potential economic reality of this discovery as we get into further drilling. So the board structure we have is very much focused on a speedy and quick discovery with our next round of drilling to go through the resource phase and then into metallurgical studies, depending on the success, of course. But at the moment, it looks highly prospective, and we'll be drilling there quickly. Next slide, please. Quick location map. This project we're talking about is at Norseman, 15 kilometers northwest. We also have our Fraser Range assets, which we are continuing to explore as well. Next slide. And the next slide. This is a regional map of Norseman. You can see there are a lot of mines in the district. It's a great area to be exploring. If this turns into a resource, and remember it is on a granted mine lease, so if there is a resource, a substantial resource on that mine lease, we expect to get into development quite quickly. The area has a lot of mines. It's a very supportive region of Western Australia, very pro-mining, obviously. The entire history of this location and the economic development has been based on mining, and hopefully we continue to be part of that story of mining in Western Australia. Next slide, please. This is the discovery drill hole. We completed 6 drill holes, RC drilling. It's all very shallow. We intersected 33 meters at 2 grams per ton 3E, which is a combination of palladium, which is the dominant metal in that calculation, with platinum and some gold. Importantly, there is a reasonable amount of copper and nickel, and that's over the 33-meter intersection. When we look at the individual assays of copper and nickel, they do get much higher, up to 0.5% copper, and the individual assays of palladium are over 3 grams per ton. So this is a 33-meter intersection within a wider 55-meter zone of mineralization from the one hole that we've prioritized. We prioritize that hole based on the sulfide content, but even that sulfide content is still quite low at just 5%. So what we are seeing is the ability of this mineralized system to host even higher grades on an individual 1 meter basis. Over the 33-meter intersection, it is consistently mineralized, but we hope as we drill to the east that we will find thicker and higher grade sections, and that is the plan with our next round of drilling. Of course, we are still waiting for the other 5 drill holes to be returned from the lab, and we expect to see some mineralization in those as well. We released the geological logs a few weeks ago. We've identified sulfides in those holes, and what we are waiting for is confirmation from the lab that those holes have some palladium and platinum. We are unsure of the exact numbers, but we'll know that when we get the assays back. So there is the potential for a large mineralized system. That section is a cross strike, and the target zone on the right-hand side of the section on the slide is where we will be drilling when we recommence drilling next month. So we have quite a substantial drill program planned, around 4,000 meters, and the plan is to drill a cross strike, looking for the thickest part of the mineralization. Once we've identified that, then we'll start drilling a long strike and following it up as best we can. Next slide, please. That's a plan view of the drill holes to date. The blue diamonds are the drill holes completed. The green diamonds were the planned drill holes, and we still plan to drill those, but we are extending all of those lines to the east. We have around 20 holes planned for drilling, and hopefully we'll get stuck into that next month. The drill thickness of the sulfide is very much increasing to the east, and we have over 5 kilometers of prospective strike length to the north. How we identify that prospective strike length is through the magnetics and air core drilling. This mineralization occurs at the lower base of a layered ultramafic sill. The upper part of that sill outcrops in places and is traceable along strike for 5 kilometers. So we know the host rock extends for at least 5 kilometers. What we don't know is whether the base of that host rock is mineralized all the way along that length. We've identified some mineralization at the southern zone of that host rock, and we need to chase it along strike. As I mentioned, first we'll go across strike, and then we'll go along strike. Next slide, please. We have only intercepted sulfides up to 5% over a 1 meter interval so far. And when we compare that to other deposits globally, the closest analogy we've come across at the moment are the Platte Reef deposits, which occur in a similar disseminated sulfide form. At the Platte Reef, the metals contained at that location include palladium, platinum, gold, rhodium, copper, and nickel. We at Callisto have palladium, platinum, gold, copper, and nickel, and we are waiting for the rhodium assays to be returned. So that will be very interesting to see whether we also have rhodium. Next slide, please. We have other prospects in the Norseman area. We have identified massive sulfide and air core drilling previously. In the month of March, we made over 5 releases on the air core results from this location with a huge number of prospective air core results. And we need to do a lot of follow-up drilling in this location as well. So we have 3 prospects with very early stage results: Jimbalana, Northern Mission Sill, and Southern Mission Sill. And we'll be working on those in conjunction with the discovery at Callisto. Next slide, please. The next steps are on the slide here. Possibly the more important point on this slide is the diagram on the right. You'll see that the Callisto prospect, the host rock is traceable over 5 kilometers to the north, and at the Mission Sill over 10 kilometers of prospective strike length. And then the Jimbalana, it has around 2 kilometers of prospective strike length, and that's where the Jimbalana meets the Mission Sill. So there's some particularly good targets in the project area. And obviously with the discovery at Callisto, that will be the focus of the next round of drilling, which we hope to start as early as early June. Next slide, please. A quick look at our Fraser Range project. It's very similar to the Thompson Nickel Belt in scale and potential. Next slide, please. We do a lot of geophysics. We're building up targets. For drill testing, we have drilled 2 intrusions with sulfides in that area. We are using the same techniques to develop more targets. And if we go to the next slide, you'll see that we have the Easterly prospect and the Green Moon prospect, which are untested EM targets close to the Latent South and Latent East prospects, which both contain sulfides. Unfortunately, at Latent South and East, they weren't economic sulfides, but it's telling us that the geology it's the correct geology for the development of economic ore bodies, and we need to go and test those targets, all of which will happen later this year. Next slide, please. A quick overview: we are well funded. We have an early discovery valuation with upcoming drill programs. Obviously, very highly prospective at Norseman and Fraser Range. We're an active explorer. We've got a great management and team, and we are focused on high demand metals, those metals which in a few years will outlast the short-term fluctuations of the market that we see at the moment. And we expect that demand for those metals will continue over the next decades. So any short-term fluctuations will be ironed out over the next few years in our view. Thanks, Tim. If there are any questions.
Thanks, Brad. I might have to put my glasses on for this question. It's quite long, but it seems quite knowledgeable. So do you think of Callisto as potentially within a large reef-type layered complex like the Platte Reef, analogy that you have used, or within a much smaller localized layer sill?
Yeah, so the Platte Reef is it's an unusual term to use for that type of mineralization because it's on the northern side of the bushveld. I think they've used the reef term, but the Platte Reef is in fact a very large disseminated mineralized system, from what I understand, with a lot of it hosted in pyroxenite at the base of the Rustenburg layered suite. So we also have a large layered intrusion, which has been explored for palladium and platinum over the past 30, 40 years. There was some detailed work done in the late 80s by, I believe, Bob Perrine, who put a stratigraph, if that's the right word, a magmatic stratigraphy together for the layered sill. So it does look to be very large. What we don't know, of course, is how extensive the mineralized unit of that sill is, but the host rock is significant. So we are hoping that the mineralization is also significant.
And another technical question, you've mentioned that the 5 kilometre contact zone running north along the Thirsty sill is based on magnetics and air core drilling. How much of this 5K length was covered by the air core drilling, and was it deep enough to contact the ultramafic sill, potentially hosting the PGM mineralisation?
No, so the mineralisation, to our knowledge, doesn't outcrop anywhere. It starts at about 120 metres depth. And where we have air core drilled, we drilled the contact zone between the ultramafic and the sedimentary host rock package. So we're drilling the upper part of the sill where we have drilled it. And it also outcrops in places as well. Further to the east, it outcrops again. So there's a typical gabbro at the top, and then the ultramafic components lower down. So in short, the mineralized section doesn't outcrop anywhere that we've been able to come across, or in the air core drilling.
And you've got another question. You've got plenty to get done on the Norseman project. Can you expand a little around timeframes and how long it will take to complete the work highlighted in one of the slides?
Yeah, so our next round of RC drilling, we have around 4,000 metres of RC drilling planned. We are clearing those pads shortly, hopefully next week. After that, the drillers will be able to turn up on site. Of course, that's dependent on the usual factors. So if we start that program in June, 4,000 metres, that should take about 4 weeks. After the completion of that round of drilling, we'll have a very good idea of the potential of the system to host higher grades. And then we'll start chasing a long strike in subsequent rounds of drilling. So I think over the next 6 months, if it goes to plan, and it is a genuinely large discovery, then we'll be going into resource drilling after the next round of drilling. The next round of drilling is really the confirmation of the type of system we're dealing with. The following drill programs will be resource drilling.
And you touched on rhodium. Rhodium, I don't know a lot about. Is that potentially a high value discovery?
Rhodium is a very high value metal. It's is a byproduct of either nickel copper mining or of PGE mining. So if the palladium grades are consistent with what we've seen, then the rhodium is really the icing on the cake. So that would be a fantastic result if we do have economic rhodium. It would add significant value to our discovery.
And is that something visible when you kind of pull out the core?
No, it's ppm level. So the palladium, platinum, gold, and any other PGEs, including rhodium, aren't visible. The sulfides are visible. That's why we can release the logs, but even those are around 5% level. The plan is we release geological logs at a natural point, either along the line or at the end of the program, and it allows investors to make their own assessments of what might be in the assays.
And it appears that Mark Creasy's increased his stake in Galileo. Is that correct?
That is correct. So he's been a very strong supporter of us. Before we were listed, we were a private exploration company owned by Mark. We listed in 2018. So we've been exploring this area for a long time. I've personally been around Norseman since 2010, and Mark has been there since the late 90s, early 2000s. So this is a discovery which has been a long time coming. I think Mark is very aware of the significance and the work and effort that has gone into it.
And given your personal long history with the company, what excites you most about the discoveries that were announced this week?
It's the potential for scale. I know these deposits can get very large. If we are lucky enough to intersect a significant system, then the scale could be very substantial.
Thanks, Brad. That's all we have time for. A fantastic week for you and your company. Good luck out there. We know there's a lot of hard work to continue, and we'll have you back on Hidden Gems probably sooner rather than later.
Great. Thanks for your time, everyone, and have a great weekend.
Thanks, everyone. That's all we have time for. We've had some great companies on today, some great stories. See you again next week.